Well, it's that time of year again. Reporting season is just around the corner. And you know what that means? Dividend season is about to heat up. So tonight, we'll bring you the hottest dividend stocks on the market right now. But we're not just handing out names. We'll show you the smart way to lock in these cash flow machines before they're snapped up. Get ready, because the window to grab these dividend gems won't stay open for long. And if you want to trade with more certainty than over 95% of traders, then you've come to the right place. Welcome to Wealth Within's Australian Stock Market Show. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. I'm Dale Gillum, and joining me are Wealth Within professional traders Janine Cox and Philip Tordtevsky. Good evening.
Good evening.
Ladies and gentlemen.
Well, I'm glad the weather on the stock market's better than the weather outside, that's for sure.
Mate, I was in Port Macquarie last week having a holiday with friends, and I couldn't believe how cold that place is. I'd rather be home in Geelong. I'm close to the Antarctic down there. It was freezing cold. How did you guys go?
Yeah, look, cold, but the market's at new all-time highs.
The market's hotting up, isn't it? Mm-hmm. Friday, it just took off like a rocket. So I'm excited to see tonight's show, but I know we're going to get into dividend stocks. I know we've got some viewer questions on dividends and how to create a dividend or income portfolio, but also got a viewer question on Drone Shield and updating on that, and another stellar stock and asking whether they should stay in it or go. So stay tuned for those. But okay, let's get straight into it. With dividend season upon us, what are the 3 things investors need to be looking for when searching for good dividends? I'm going to go to you, Janine, because you're the dividend queen.
Yeah, I guess that's interesting, isn't it? In having a big look at dividend stocks, it was quite an experience for me to see some huge looking dividend yields and then only to look at the share price and see the stocks plummeting down. So obviously don't be fooled by the percentage yield. You've got to look at the chart always. That's our motto. And look, as far as those yields are concerned, it's about making sure that you've got safe stocks, really. That's the point. What's the point in risking your capital if you're going to get a dividend to then maybe lose 20, 30% on a stock because it falls away or more? And that's what's been happening.
So what are the 3 things are?
Well, that's the first one. It's got to be a safe, relatively safe.
I can't remember.
It's about the risk is a big thing.
Okay.
Your risk and reliability. You want to make sure that the companies actually are good payers.
So good payers. Yep. And the third one?
The third one is really a bit of a question of, whether the stock suits your
goals of your portfolio.
Goals of your portfolio, that's really important as well.
I'm glad I remembered that one. Anything else before we move on to some
I guess
charts?
you don't want to be, like we said before, you don't want to be paying out something because it's about the cost to you.
Well, I know a lot of people think just because a stock's paying a high dividend, it must be attractive, but not necessarily. That's what you're saying.
Yes.
So you need to put a lot of different criteria in around that stock.
Definitely.
So let's go and have a look at the charts, and we'll start bringing up the first high dividend yielding stock. I'm going to go to you, Phil.
All right.
How about we talk about some of those rules around these stocks as well?
Yeah, absolutely. So first up, we've got Super Retail Group Limited. Now, this one is paying a yield of about 8%. Look, generally on our market, a yield over 4% is relatively
pretty good, isn't it?
Pretty good, right? 6%, you're starting to look at a nice yield. But again, speaking to what you said before, it's the consistency, the reliability of the company paying that dividend. Does it have a track record? What's management like at the moment? Is it earning? Is it likely to earn?
Should we be looking at more of an average dividend yield look at it at a portfolio level, or do we look at it as an individual stock that we go, I want a stock paying a high dividend, or should we go, I just want my portfolio to have an average dividend yield of 5 or 6%?
That's a really good question coming from you.
I know, that's why I'm sitting in the chair. But you can answer it if you like.
Look, we think that generally that you want to go for something that's at the average dividend yield or higher, but you don't want to go for something that's sort of above 8% generally, because anything that gets sort of up around that 10, 11, 12, it's often because they're falling in price.
Okay, so maybe not necessarily a good stock to have in your portfolio.
Yeah, so that's you've just got to put that risk criteria over those ones that are the bigger dividend payers, and then look to the chart and let the chart tell you whether it's worth it.
So let's go back to the chart.
All right, Super Retail Group, let's have a look right now. And I mean, it doesn't get much better than this, Dale, because when I zoom out big picture on the monthly chart here, if you're looking for an income stock, if you're looking for a safe dividend stock, well, you've always got to ask the question, is this stock producing from a share price point of view? Because like you said, Janine, there's no point buying a stock that you're going to see fall out of bed. What's the point, right? But with Super Retail Group, we date it back to 2004 listing. price is trading almost near the all-time high. We're trading at around $14, $15. Yes, it has had its periods of ups and downs where the stock goes up and down, which is why it's ever so important, even if you are building an income portfolio, that you know how to read the charts, you know how to use technical analysis, you know how to pinpoint those opportune moments to get in at the right price to cover yourself, so you can be able to hold them for the long term, because that's what you want, right?
You do, but this is a pretty good dividend yield for a stock that's moving up.
Oh, yeah.
And not one that's been spending years going down. It's been a nice trending stock.
Yep.
So that's a really exceptional dividend for that, isn't it?
And I would even add, exactly to your point, look at the sector, look at where the stock is. I mean, we've got tariffs right now, we've got all these overlays going on in the economy. How does that affect the specific industry you're looking to get income from? Because when we're talking about income, that's directly coming from how well the company performs. So
well, it is, and it's why does a company pay a higher dividend yield and why does a company pay a lower dividend yield? Maybe we can get into that in a little bit. Let's have a look at our next chart.
Absolutely. The next one we've got is ALX, Atlas Arterial. Now, this one pays 7.83%. Zero franked. So if your criteria was that you wanted a fully franked share, this obviously wouldn't meet that criteria.
But is that always a bonus?
Pardon?
Is that always a bonus?
Well, look, it is a bit of a bonus, but sometimes, the grossed up dividend can mean that you get, 2 or 3% more, and that could be worth a lot for some. So it really does depend on your situation as well. So, but looking at this one, you'd be pretty happy if you're getting 7.83% plus a bit of capital growth, wouldn't you?
Well, not if you bought it at $8.
Yeah, that's where the capital growth has to come into it, doesn't it?
Yeah.
So, I mean, it's gone through a high recently. If we're looking at the monthly chart there, we can see it's broken through, but it did fall away and come back again. So because it's tested that level, I'd really want it to get back above there before buying, but this looks like a good setup. I mean, it's been in a nice decline, a nice steady one, not too erratic, just a nice steady decline down there. And you can see there that I'm trying to put my trend line on there, and for some reason it's not liking it. But there's a decline there, a trend there, and it looks like it's respecting the angle of that quite nicely, and it's broken through it. That's always a first sign, just to see that it's started a new trend and turn around. Too many people are trying to catch a falling knife and pick stocks that are paying big juicy dividends while they're falling away. I mean, if this stock was still falling away, there's no way that we would touch it, because it could continue to fall all the way back to that low there. But the fact that it's actually come through and looks like it's starting to move up, the proof in the pudding will be that its next attempt. So
this is looking really, really nice at the moment, and very close to being a buy. So, and I think what a lot of people may or may not understand is the dividend yield is on the current share price compared to what it was paying out. But as it's starting to rise, that dividend yield's going to fall away. But so if you can get in on this early, which is what the show's about, it's like getting in early on a good dividend yield, lock that sort of dividend yield in, if I can say that, even though no dividend's locked in. But yeah, they're locking in a high dividend yield and then getting the growth out of it. Not doing the opposite of what you were saying, is you're saying people trying to buy the high dividend yield on the way down. They're losing a lot of capital just to get a better dividend, but if they're losing 20% in capital to get a 5% dividend, that's not necessarily smart investing, is it?
Yeah, exactly. When we were doing the search for these stocks, we found a stock that was still falling. It's actually plummeted in the last month, and its dividend shot up to 53%. I think it was Helios or something like that.
Yep.
But it just goes to show, if you're watching that dividend and that's all you're focused on, then you've only got half a story.
You've got half a story. All right, well, let's have a look at another stock.
All right, next up is New Hope Corp. Now, this is another one. I mean, speaking to being early to the party, that's the most important thing, getting those opportune moments. And you're only ever really going to get that by looking at these the charts. And, New Hope is in one of those positions. You can clearly see huge correction back in 2019. And I'll measure it because if my eyes serve me correct, it's probably quite similar. It's about a 76% correction through there. And now we are pushing at least 50%. If we measure that, 55%. And when you're talking big picture, I'll keep it on the monthly chart, big corrections of that nature can signify these major lows. I mean, we saw it back in 2020. And right now, if we were to ask the question, have we seen enough confirmation? Because that's what it's about. Is there enough confirmation to say, hey, we've turned the corner here? For me, the answer is going to be, I'd love to say yes, but I'm going to say no. And the reason I say that is because major reversals like that have happened in 2016 and 2020, they take a little more time to unfold than just 1 or 2 months up. So that's, especially now we're talking dividends. We're not talking a growth play where you can buy in and get out. when it's a dividend play, I would eke on the more...
Okay, can I challenge you? Before you spit the rest out?
I didn't even finish what I was going to get out.
She's like that.
I was about to say something good too.
Okay, now what if it closes on the high of this month? Because I know you're looking at the last 2 months probably and thinking, oh, those closes are all around the same level and they're all low on the bar. But what if this month closes up and the weekly chart's looking good?
Well, I'll explain exactly what I'm looking at.
If you're allowed to finish.
But to me right now, it's that buyer-seller dynamic. And if we go back to that chart, why I am still a bit cautious is because as you can see, during 2020, there were multiple times where the buyers came through for the sellers then to take over. But then when that relationship started changing, more buyers, less sellers, that's when it became a safe proposition. Right now, we've had huge selling 3 or 4 months all the way down. We've just seen buyers. I want to see what sellers do next.
Wise words, and I think it's really important because we do talk about buying on confirmation, not speculation. And at the moment, this looks really good at the moment. It just hasn't proven it's really good at the moment. So let's get to the next stock.
Alrighty, the next one is Stanmore Resources. I had to sort of Stanmore, almost spit that out. But this is looking really interesting from a technical analyst point of view, just the important levels that it's just recently rebounded from. And on the monthly chart, a really strong close up. We need to see that really strong towards the end of the month and to stay above the $2 mark. That's what I'm looking for right now. And looking over here, it's had the last 4 weeks up. So if we think about that, I mean, we've got here, the stock's saying dividend yield 7.7 fully franked. I mean, that's a pretty good deal. You just want to check where that is. And just check the history of the reliability of a stock like this. Have they ever stopped, as we were talking before, paying dividends, and what were the reasons for that? But looking at the chart here, if I'm on the weekly chart now, just to create a bit of a point of difference there with what we were talking about before, but the angle of the trend coming down there, it's only just broken through. So that sort of fits with what Phil's saying about these tests on the monthly chart. At the moment, we've just seen here 3 months up, including those bars in there after the low, but still, like the other one, there's no test of that low on the monthly chart yet. And because the angle of the trend is showing us here on that weekly chart that it's just come back to the angle of the trend. This week could reverse it, because it's there. So we just want to see that it's not going to reverse it. But nice trend line though coming down there. So I do like it. I do like this stock. The volume's actually remaining solid. We got to spike volume here as the final sell-off exhausted into that low. And then on the turnaround, we start to see good volume, steady volume coming in there. So that's important as well.
Yeah. I might add one thing, if that's okay. If we just go back to that monthly chart, look, everything you're saying, Janine, is spot on. It's just a little bit more confirmation now why this is different to the previous one, and our students would know this. In fact, I've seen some emails come through about this kind of thing, and what we teach in certain modules, this topping pattern through here is very textbook, and not only is it textbook, knowing what comes next is the important part. Better. And when you see how that is unfolding, that's why even though there's not that much confirmation on this stock, this one gets me a little more excited, although it is a bit early.
Wow. Thank you for that extra point, Phil. Those very, very wise words from you. Anyway, hey, if you do want to get into the stock market and you're an investor, you want to be a little bit more active, understand how to create a dividend portfolio, then you might like to get my book. Yes, it's that time of the show. It is promoting my book. It's for free. You just got to pay the shipping. So head over to our website, wealthwithin.com.au, and grab yourself a copy of How to Beat the Managed Funds by 20%. As I said, it's free. You've just got to pay the shipping, and I'll share with you how to start a portfolio that gets you some real kick-ass dividend yields over long periods of time. But anyway, let's get into another stock. What have you got now, Janine? Oh, no, I'll go and go to Phil because you...
Thank you. All right. This is my shot. I better make it quick. Let's go. Next stock. This is Magellan Financial. Interesting stock. And the reason I say that, and I had to have a bit of a breather on that, because this, although it's paying a dividend yield of 6.29%, it wasn't always a fantastic yielding play. And that's the important part to consider with Magellan. Why it makes it even more appealing today is because we're coming out of that period where it wouldn't have been an appealing hold for a dividend play. As the stock's going through these cycles, a huge correction like that, And what we're seeing now is forming one of those really strong basing type accumulation patterns. Is it super confirmed? I mean, would I be going all in at these levels? No. The real safer opportunity would be once it gets above this, if we zoom in.
1260 something?
Yeah, that January 25 high. That'll really say, hey, you know what? All this accumulation through here is starting to break out into expansion. But I love the fact that you're looking at it after a 70 or 80% correction for the income. Just be prepared, given the nature of the volatility and how this moves, that if you are going to get in and it does give you signs, you know, it ticks up to that $12 or $13 level, then starts giving serious signs of reversal, you don't just hold it for the sake of holding, because it could dump well past.
Now the other thing is, you know, because we can look at banks like Westpac and ANZ and we can get good dividends on those stocks. So, you know, why would someone choose a Magellan over an ANZ or a Westpac?
Well, that's a good question. Why are you asking me?
Because you're full of all the answers tonight.
I'm full. My question is who was the person that come up with 69% franking? And why did you get that figure? You know, that's the one for me. But you can't. I mean, obviously banks pay consistent dividends. They're always consistently around the same. They're generally always 100% fully franked, so they're just reliable. And I think that's the answer to your question.
Isn't it?
When you're looking at some of these other stocks that pay high dividend yields, that yield is not necessarily sustainable. And because again, it was back to that question earlier on that I said is, why do some stocks pay high dividends and why do some stocks not pay high dividends? And that's a question we haven't answered.
Well, we've got another interesting stock amongst the mixed that is sort of the opposite of Magellan, if you like. So in terms of the chart
So you want to get into that now? I think Janine's running the show tonight.
I might just take a rest.
I think we'll just go somewhere else. Would you like to bring up another stock?
Oh, great. Okay, let's go. IPL, it's not the one though. You have to stick around to see the one I'm talking about. This one is dividend yield 6.96%, 25% franked. Now, we've had this nice decline coming down all the way to this low. Really interesting to me that where it's trading at right now. We've had a nice little test, Phil, of that low.
Good. All right.
Okay, so that's your road test, isn't it? That little move off the bottom. It doesn't mean that he'll like the stock, though, I have to tell you. So you just have to wait for his commentary. But, I mean, the chart doesn't look great from the history point of view, but that could be for a number of reasons, which I haven't researched that part of it. So you might need to do some research back into the company. Sometimes there are backdoor listings and different things happen on stocks. But the trend is really nice and even coming down that fall. That's something you like to look at. I don't know what's going on tonight, but this is playing up on me. Okay, so there we go. Our trend line, beautiful down there. Classic trend. It's trading above that at the moment. There's a whole lot of things on there to tick the box over for me. I like it. I really like to see it finish the month high on the bar for me to say, yep.
I'm saying this is my pick of the bunch. There's two I really like in that are pretty much buys either now or pretty soon, and I like this one, so well done for that. Well, anyway, later on in the show, we're going to dive into some more amazing dividend yielding stocks, so stay tuned. But now it's time for this week's trending topic. Now, Janine, I'm sure you got a ripper for us today.
Well, I do actually, and it's a lot of excitement on the market at the moment with mergers and acquisition activity heating up in Australia, with the latest headline grabber being a $3.3 billion acquisition of Insignia Financial, code IFL, one of the country's leading wealth managers. IFL shares are trading below the offer price, which begs the question, should investors hang on, or is this an opportunity to jump in for a potential quick gain?
Wow. You're going to give
the
me
question. Well, look, I mean, there's two parts to this really. One is the offer price, as far as the newsfeed read, was $4.80.
Yep.
Now, when I looked at the share price, it was somewhere around $4.40, right? So what is the market thinking right now? The market's thinking that maybe there's someone else in the wings, maybe because originally CC Capital, who is the company that are doing the takeover, they came out with an offer, I think it was around $5 to start with. And then one of the international companies came out and offered another. They did their investigation, you know, obviously they've got to do that. They backed away from the deal because there was a bit of a bidding war there at one stage. So, but now we're looking at CC Capital coming back from the $5 mark. It's offering $4.80 now.
That's got to tell you something, doesn't it?
Yeah, but the board apparently, according to the newsfeed, have approved the takeover. They're going to back the deal at $4.80.
So then why is it trading at 440?
Well, this is the interesting thing.
That's a fair chunk between. Do you want to have a look at the chart?
Well, this is where it gets sweeter, okay, when you go and have a look at the chart in terms of understanding what's going on here. Now, I'm just going to enlarge the chart up so we can see that. So at the moment, we're looking at the share price here. Now, I just want to make sure that that's all
So the offer's at
correct.
480.
Offers at $4.80.
Currently it's at 393.
Yeah, which is not today's data, obviously. So we're just waiting to see that on the chart. So it's not updated there, but it looks a bit odd. I'm just going to go to the weekly chart so I can get a better picture of that. So at the moment, well, it was trading at around these levels here, around $4, and that's showing Friday's close there. So it's not updated. That's what the issue is.
So if you're not in it,
so if you weren't in it, right, there's this whole concept of getting a bit of arbitrage and an opportunity to have the shares at whatever it's trading at today versus, I think it was up 15% today initially on the open, and it closed back down again. So there will be this back and forth trading that goes on to try and make a little bit of money out of it. So if people were to get in today and they're short-term traders, they might be able to make a small amount of money, you know, eventually with the takeover proceeding.
So if you're already holding that and the takeover bid's happened and it's 480, you know.
Well, if you're already holding it, then you're not going to sell it on market for less than what the offer is. That's just silly, depending on how much the difference is. So if it was only a few percent, a couple of percent, it was trading away from the offer price, then I just take the money and go. But if it was trading at a significant margin from that, then the whole thing you want to do is stick around to get your money if you believe, based on your own research, that it looks like the takeover will go ahead. And given the board have actually approved the takeover, it's got a high probability of going ahead. Yeah.
Okay.
And there could be someone else that comes in out of out of nowhere, or left or right field to
well, there's something going on. Normally
involved.
This doesn't happen where there's a big gap between the offer price and the current share price. So
but if you don't own the stock, you know, that's one strategy. If you own the stock, you know, just sit tight for now.
Cool. Anyway, well, time now to get back into our topic for the night and reveal some more amazing dividend stocks. I'm going to go straight to you, Phil, to give you a chance to speak.
All right, thank you. Let's get to the next one. RPL is the stock code. And I mean, you know, I just want to say, I know we joke, you know, we're in joking today, but we're showing some serious stocks. And if you read between the lines, you know, getting the timing right is everything.
I don't know how many times I've seen emails coming through from people who watch the show and they go, I make so much money from the stuff that you guys talk about, it's not funny. You know, and then you go, well, why don't people do the course? We're doing this on a show where we're only just scratching the surface of what we do. Why aren't you doing our course? Especially now, we've got this great special offer at the moment. It's still on for the rest of the week, I think, where you can get our diploma course. Like I think it's like $9,000 worth of bonuses or something. So just pick up the phone and give the team a ring and say, I want to join the course that Dale's talking about.
Yeah.
But I digress. But I agree with you.
Yes, and I mean, you know, I say that because when we go and look at this chart, it's, you know, speaking about building an income portfolio, and there's so many people out there that are thinking about income, thinking about retirement, thinking about, you know, how do I get this really strong, safe income portfolio, and it all comes down to the timing of when you're picking these stocks up. And geez, you know, following that, the timing may not be, you know, more perfect than what we're seeing right now, although it is much higher risk. The reason I say it could be a great opportunity is the fact that what I'm seeing with these lows through here in October and April, almost exact, that is a very interesting.
That's a good looking stuff.
And similar reversals too at the low. Like just looking at the bar reversals.
Yeah.
You know, the close low and then a close up, you know, in reversing that direction straight away off that low.
Yeah, so I mean, you know, you really give yourself now the opportunity to line up some really nice trading opportunities or buying opportunities, if you will, for that longer term, because that is quite significant, the fact that it's held, it's breaking out now. What would be quite nice also is another short test. If we go to the weekly chart, I'll bring that up to see how we're unfolding. We've got some really nice volume coming through. That's quite nice. We've had a bit of a bounce. Hey, look.
Gee, the volume's changed significantly after that.
Yeah, it could warrant you know, an opportunity around these levels just on what we're seeing right now.
Perfect.
Just keep this one close by.
I love it, Phil. Janine, you can have the next one.
Ooh, okay, yeah, it's getting too exciting. Now, this is one of the ones that I really do like. This is Grain Corp. Yield is 6.5%. This one is fully franked. Now, it hasn't done much, right, over the last since COVID. So we had this huge rise in COVID, then it's just tried to rise up again. I thought that this was gone. I thought it was going to come down way further, but it hasn't. It's actually reversed really strongly in May following the Trump scenario. It's moved up. We've had a second month up in June. Now we're having a test of this low to see whether it's going to hold. And that to me is the real important part here. So a move back through this high could mean that it's going to head up closer to $9, $10 in the short term, but we just need to see that turn confirmed. So a 6.5% dividend fully franked plus some capital growth in there. It's pretty good, isn't it?
This is, I don't know exactly if this stock is directly into food, but I would assume by the nature of it. I have read a bit about it, but I was watching, a different podcast today, if you will, and one interesting fact that came out was that the bees, about 60% of bees, are dying around the world, or something like that, to that nature. And they're such a crucial part of getting crops to.
No bees, we're all dead.
Right, and just on the back of that, they're saying how the food business is, food prices are going to become a lot more expensive. So, from a industry point of view, potentially long term, there is this real strong backing with these kinds of stocks that, hey, a yield play around here is not the worst thing.
I like it. Next stock? That's not yours, Janine. That's Phil's. You're not running the show.
All right, let's bring up the next one now. Janine was that excited that we've moved the workbook here, but next stock we've got is Data. All right, now you're talking my language. Tech stocks, high growth. But look, 6.4% for a high growth tech stock.
That's amazing.
Isn't it?
That is amazing.
Especially one that's trading at the levels that it's trading at the moment.
And that's the exciting part, right? We bring up this horizontal line through here. It's very evident how important this level is at around 750. Previous all-time high, how often do we see this previous all-time high? Once it holds, it's screaming at you saying, hey, there's a new base in this market. Big run up. We can see as it's falling on this second test, the bars are getting slower and tighter, giving this a cumulative type move. So I think if this can pop its head above that May 25 high, it's looking like it could go for a nice little run up. There is a little bit of resistance if you add through this level here. And so right now, above 925 is the safer confirmation. Anything under that, it's a little more risky, but hey, if it shoots through there, the way it's lining up, I think this could go for a very nice run up to $12.60, and you might be picking up a nice yield at major lows.
I love the stocks that you guys are picking because they're not the small stuff, but some of these would be great for people's self-managed super funds to pick up for growth and a nice little dividend yield to come in on top of that. So I think these are great looking stocks at the moment. So well done. Now we've got one or two more, haven't we?
We've got one more. Region Group. Now, this stock actually made an interesting topping pattern up here. Its dividend yield 6.04, 0% franked. So if someone wants franked, this is not the one for you, but it does pay a good dividend. What I thought was interesting about this one is the resistance level across here. You can see it straight across, which is where it's challenging right now. So it's gone through resistance on, this was 2 weeks ago, roughly in May, pulled back for a week. Now, at the moment, it's not showing signs that it's going to go through just yet. But if this stock pushes through, then the sky, is way ahead, in terms of the upside potential for this one with very little resistance. There's some short-term resistance you can see across there, about 11%, but there's a 30% upside potential back to these highs. So if it gets back up, could go back up to about $3 from $2.40, which is 60 cent gain. So I think, if it does get going, it looks good. If it falls away below this low, then just let it go and then wait. As the Frozen song, I've got that in my head at Disney and Ice last week.
You know what? I mean, I think what you've got here is really interesting, but I'd love to see, is there a possibility for us to overlay dividend yield on a chart to see, well, if it's got a high dividend yield, what's actually happening on the chart?
Look, I did that a long time ago. This was around the time of the GFC when I was looking at stocks. It is such an interesting study, and if you're really interested in the stock market, it's something worthwhile doing.
So can I ask for everybody who's watching the show who says, Janine, can you do that again? Would you do that again?
Well, you need, it's a lot of work.
She said yes. That's what I know. So what was your pick? What stock?
Probably not this one. I think I like Dividend is one, if we just look at that chart
That's all I wanted was one, so that's Dividend.
No, I need to give a couple.
No, you don't.
It's
Phil's
my
got
true
to have
form.
one.
Yeah, this is how the
And
process goes.
IPH, yeah, IPH is also one that I
What
like
do
as
you
well.
reckon, Phil?
I'm going to say Dividend. Nice growth space. And
2 votes for Dividend. Jeez, I was going to go IPH, so we've got 2 and 2. Because Janine has 2 votes. For some reason, she gets 2 votes. But anyway, if you want the skills to analyse stocks, just like you've seen tonight, visit our website, wealthwithin.com.au. Now, moving on shortly, we have an amazing hot stock tip coming this week from Phil. But first, let's answer your questions. Next is John, who writes, there's a big gap in the market for high-quality income-focused portfolios built on sustainable dividends, solid fundamentals and long-term reliability. Not high-yield traps, just clean, consistent income from top businesses. I would love to see you cover this in detail or build out a sample portfolio for long-term retirement investors.
That's really easy to answer.
It is. Read my book.
It is. I was just going to say the same thing. And also top 20 stocks, because that's what the book's about,
yeah,
isn't it?
Correct. Because I mean, am I allowed to disagree with him? Because I don't think there's plenty of places you could get that stuff from. There's a lot of the big end of town concentrate on that sort of stuff, of that long-term investing, good companies yielding stuff. You can even get ETFs, if I don't mind me saying.
But the beautiful thing about it is because you can have such tight criteria. So if you're talking about big businesses paying consistent dividends, looking at top 20 shares, it narrows the field so much that it makes it so easy to build a portfolio yourself rather than needing anyone in industry to do it, doesn't it?
Yeah, well, yeah, and that's what I'm saying is my book covers 4 different portfolio styles, and I guarantee you one of them is going to fit exactly that, because you've got to look at it in terms of a long-term investor. You're not looking at a dividend yield in terms of one stock. You're looking at, well, what are the average dividend yield I want my portfolio to have?
But they still need direction to be right, even if it's the top 20 stocks. Because, I mean, look at Woodside. That was a top 20 stock.
Yeah.
Woolies has fallen significantly, top, big stock.
Yeah,
so you can still have those big stocks that fall away. And remember what happened to NAB. I mean, it was a dog stock for a long time.
Anyway, so guys, as I said, just grab my book and you'll be able to understand how to create that portfolio for yourself anyway. Now, Jake's email is next and he's asking, can you please cover FDV? I bought it at $34.08 and would like to know where you can see it going over the next 3 to 6 months. Phil?
Okay, let's have a look at FDV on the screen. And I mean, yeah, look, bottom picking is probably an interesting word that you might like to use around these levels. But look, to me, I'll give two bits of advice. One, you have a move on the monthly chart where it's come down, and really this has been the strongest month that the stock's had for quite a while. It's broken out, it's taken out that April 25 high. Now, the question to me really boils down to, is this a short-term trade, a medium-term trade, or a long-term trade? And where have you placed your stop? Because regardless of
none of that we know.
No, we don't. And that's the part that, maybe next time if we would know that, we can give a way more in-depth answer to what we're looking at. Because if I just go back to that chart, that answers, that question really provides the answer to what comes next. And you bought at 34.8 cents. And the reason I say this is the stock's come off 4 weeks or 3 weeks of really solid rise. Now, let's just say you've placed the stop at around 29 cents or 28 cents. You might in fact be cutting yourself short and getting stopped out just by the nature of this volatility before really getting that next leg up and getting that long run up. And that's because you might have a short-term view on the stock. Whereas if you're a longer-term view on the stock, you might have bought here and said, hey, you know what? I'll set my stop around that 19, 20 cents, and you account for the volatility, allowing that longer-term play to unfold. Because at significant lows, the price action can get a lot more volatile and a lot less uniform in the nature of trend. And so that's why that is the most important part, where you've placed your risk here so you don't fall into getting stopped out too early, and knowing what you're trying to get out of this. Because the last 3 weeks, the way it's gone up, I would say with a high degree of probability, there's going to be a pullback coming.
Yeah, I would agree with that.
Yeah.
Anyway, Sebastian now writes, love the show. I'm not a student yet, but will be soon. I've recently bought into LOT at 18 cents. I believe it has found the support level previously held in 2022-2023. Volume has picked up since September 2024 and has broken the recent downtrend. It has also recently closed the daily gap at 17.5 cents. I really like this stock, but would love to hear your professional discussion on it. And my discussion is, why haven't you started the course yet? Because you would know the answer to that question. But anyway, I'm going to go to you, Janine.
Well, Sebastian, interesting stock choice that you've picked. First of all, I'd like to share with you my view on the monthly chart. So if you've just bought it just now, the monthly chart's showing me indecision, right? Because it's still tracking not far off the low, and it's just all these bars are sideways. It's really not showing any confirmation. Just compare that to when this side of the chart, when you can see that there was a lot more support for the stock. Because the thing you've got to remember is, looking at the stock, how hard would it be for big money to move an 18.5 cent stock? It's not hard for big money to do that. So if there was big money in there, this thing would already be pushing up higher than it has. So my thinking is that I think you bought too early, and I don't want to be rude. I think what Dale is saying to you is good advice. You need to get that study behind you and really get an understanding of the timing of when to get in, especially if you're going to trade these lower cap stocks. It's so important. Looking at this stock, if it trades below the low of that outside bar in June 2025, the risk is so high for it to come back and then test this low and could take it out. So that's the risk that you've put on your position already in not confirming that the stock's actually moving up properly. So a move below, and I don't want to split hairs and say that high or that high because they're so close together. So just pick the higher one at 21.5 cents. Once it gets through that high, then you can breathe a bit of a sigh of relief. But you've really got to draw the line in the sand, decide on how much you're willing to risk, set a stop loss and just stick to it here, because this is, we're in a higher risk territory.
Oh, we are, and I think the first email, or the email before this, the person bought too late. This one, they bought too early. So it's a problem with a lot of people. They're buying the wrong stocks at the wrong time, or the right stocks at the wrong time, but the worst is they struggle to sell. And that's the interesting thing. But anyway, next is Chris, who writes, I'm interested in your views on ANZ for the long-term trade. It has triggered my buy rules, and it has found support at a strong level at $28. Phil, ANZ.
Yeah, look, let's go and take a look at the chart, because we're talking about a big bank, $28 support, love it. I mean, you can see how important 28 has been from March 2024. We recently came back and tested it back in June 2025. And now, like you were mentioning before, Janine, you look at the chart through here, the nature of the price action is up, down, very typical of something, indecision or going sideways, accumulation, if you will. Now what are we seeing? Starting to break out into nice higher base again. If this can reverse up and start to take out 18th of July's high, we're going to start resembling those higher bases and trendy type moves. And I would even add on ANZ, when we look at the last couple of pullbacks, we've had a decent pullback back around 25% back from the 2021 period. Now we're coming into, and you've got to factor in, we've had the whole COVID situation and tariff situation. We've come around almost at 20% for a bank, and that this 20% correction is much higher than this one. So on the bigger picture time frame, we're starting to form those higher bases as well. And, we always ask that question, Dale, are you early or late to the party? Now, in this example here, from the bigger point of view, the big picture point of view, relatively early, because you've just come off a 20% correction. So I think now is an ample time to be looking at a stock like ANZ, especially coming into earnings and dividend periods where big players will be looking to pick this one up as well. So good place to be looking at it, that's for sure. Just about lining up your risk reward and how you're going to trade this stock. That's all. It's
still not even at all-time high. I mean, CommBank keeps shooting the lights out all the time.
Yeah.
ANZ, not at its all-time high. So I know the banks are your favourite. Give me your 5-second, and I do mean 5-second take on ANZ.
Same as Phil. That's the shortest reply you're ever going to see from me.
And it just got longer than 5 seconds. All right, I'm going to go to the next stock is for you, okay? I'm going to promise you this next stock is for you. We've got Joel now writes, would love your thoughts on Fortescue. I'm looking at buying for my medium-term portfolio. The stock looks to me like the low is in. By the way, it's forming on the chart. I would have an initial target price for $20 to $22, a 15% stop loss, but depending on the entry, may need to give give a bit more room, as this stock does have volatility. And I know you love this stock, Janine.
I do. I think it's been struggling though, because obviously the iron ore price is low, could go lower. That's the real risk for FMG at the moment, and we want to see that iron ore price go up. But when I'm looking at the iron ore price, it's not confirming for me that we've got the low in. And that's the real risk right now.
So is this the opportunity to get in before the low is in?
Well, that's the thing, and I'm really excited about the chart. Don't get me wrong. I'm looking at it. I'm thinking, yay! I think we're there. Like when we look at the monthly chart, we can see it's just tested that trend line. It's just breaking through right now, and so many boxes I'm ticking on FMG at the moment. It's pushed up through that point there. I'm not sure what it's trading at today. That's Friday's bar there. But if it pulls back here and then takes off, that's beautiful. If it keeps going through that high, then that's beautiful as well. I'd agree with the target. In fact, I've got a higher target on it than that.
Well, there you go. He's just being conservative, and that's unusual. You're not as conservative. You're normally the most conservative one on the panel.
There you go.
So that's okay. 15% stop loss, okay?
Yeah, I would say that's pretty good.
So he's done a good job.
Like that, yes.
All right, well done there. Now, Ali writes, I brought EOS and DRO, or Drone Shield, and currently am up 80% on EOS and 135% on Drone Shield. Must have taken your tip, Phil. I personally have had high hopes for these two stocks and will be riding them until they show signs of a reversal. So do you guys think this is the top for both stocks, or can they push higher? It's always the big question, isn't it, Phil?
Yes, and I mean, if you are asking this question, again, if you've made 80% on EOS and 135 on Drone Shield, both hot stock tips actually, Dale. We picked EOS just before it ran up.
I wanted to float your boat, but not that much.
Yeah, we've got to give it a bit more shine. But hey, use the money to get into the course, because you want to avoid asking these questions. That's the most important thing. You want to eliminate saying, okay, is this the top, is it not? When do I get out? Again, going back to when do you sell? Because that's when the money's made, really. And
that's the knowing, and that's the thing is with our students doing the course, is they just know what they're doing.
Yeah.
They don't need to ask the question.
Yeah. And so, I mean, looking at EOS, we'll just cover one today. Obviously, Drone Shield we've covered for so long over previous weeks. But EOS right now, again, the way it's unfolded has been so textbook in the fact that this beautiful pattern that, as both of you would know, what typically precedes that is a nice run up. And now we're coming into a period for me where, yes, it's really extended on nicely. There's momentum. It's busted through this resistance level through here. By the end of the month, we'll know more as to whether this holds as resistance or not. So watch that $3 level, see where the month closes. But hey, it's about knowing those selling techniques to not just sell at a resistance level. That's not what I'm saying. It's knowing when the stock is likely to reverse. So that doesn't mean trying to get out at the absolute top, because trying to get out too early might mean that this stock does have the potential to run up to $7 and you miss that. It's about watching it unfold week to week, month to month to identify that rollover. And if I look at what I'm seeing on the weekly chart right now, there is no sign of that just yet.
But that's my point all the time. People say to me, how far do you think this stock's going to go? And I go, I don't care. And they go, what do you mean? I said, I don't care. Stay with it while it goes up. Get out when it comes down. Who cares how high it's going to go? Because nobody ever rings me worried about a stock going up. If you've got your exit strategy, which is what we're talking about, is our students have exit strategies. So as long as you've got an exit strategy, who cares how far it's going to go? Yeah. It could go 1,000% Drone Shield and the other one could go 500%. It doesn't matter.
Well, that's where it destroys your psychology. If you get out too early and you think, oh, I should have stayed in. And, you know, we had Zoran on the show the other week and he works for a broker and he said, you know, one of the most common things he sees is traders cut their profits short, let their losses run. Whereas, in fact, you're supposed to do the exact opposite.
That's what we teach.
We teach to let your profits run, wait for that signal to get out and cut your losses short. So, yeah.
Anyway, well, next is Nick, who writes, I'd love to hear your expert analysis on Amplitude Energy. It has broken out of its downtrend and a pattern, and I'm currently waiting for a retest to confirm an opportunity. Now, this is a stock I know you're excited about, Janine.
Oh, just shaking in my shoes here. Very interesting stock. Let's go to the chart and have a look.
Interesting can mean a lot of things, can't it?
Now, it's interesting from the point of view it's formed this really pretty little pattern, which is so exciting to see. So across here you can see there's a little bit of resistance there, and my drawing techniques are not great today, so just bear with me. But you can see that it's broken out of this sideways consolidation, closing out above it. Looks very nice. I think this stock has legs to go, but we still need to see a bit of a pullback and a retest, which can often happen after these breakouts. If it keeps going straight up, and continues to close above this high, then it could just continue to rise. But often we see 1, 2, 3, 4, numerous weeks up here, a couple of months up, straight up, and then a pullback testing. So I think it looks good, but it's really illiquid. And so therefore the challenge is being able to get it at the right price, because it's $2.45 at the moment. If you were to try to get into it now, then that's okay, but you just have to be aware of what the downside could be on it. So if I grab this tool here, we can have a look at where a stop loss could be to sort of make sense of this. But you can see there's nowhere to sort of set, no logical place to set your stop loss other than a percentage, which doesn't satisfy me when trading something like this. But if once you've set the stop loss, so there's a 10%, if it goes below that point and you were to get in now, you could get whipped in and out of a stock like this, couldn't you?
I'm seeing a lot of people talking about like scalping stuff on these low stops, getting into a stock for a few hours or a day and
That's
trying
ridiculous.
to scalp. And they're trying to make $500 here and $500 there and everything. I'm thinking, wow, what a lot of effort. And they're thinking like they're bulletproof, some of these guys, because they get a few of them right. And it's like these sorts of lower liquid stocks that go up for a few weeks that they jump into. But as we've seen tonight, we've had a few stocks people have bought at the wrong time, but they're not necessarily understanding where it's going to go to. But what a lot of people don't realise is they can actually trade less and make far more money, have a lot less risk, and I say get their goals a lot quicker. What I find is people trading these stocks, it takes them so much longer to get to their goals.
Well, like that EOS and the Drone Shield, I mean, if you had been trading really micro time frames, you would have missed out on the best.
And you missed the best
part
move.
of it.
You missed the best move, absolutely. But anyway, now it's time for our hot stock tip for the week. Now, Phil, I know you've got another super one tonight.
Yes, I do. We have Perpetual, a common stock out there, and I want to bring your attention to the screen, which Perpetual came out today and announced a fourth quarter business update. Now, I've gone through this update. It has a slightly positive tinge on it. I mean, obviously the company still has issues with outflows, farm outflows, and also the UK situation. But slightly good news is good news, especially when we're talking about a company that when you tee up the technicals starts to become really, really interesting. And, you often see this with price action. It's a company that's maybe the fundamentals aren't working or things aren't going right, share price is falling, but then at some point a little bit of good news comes in and you start to see things turn the corner and slowly a bit more and a bit more. And it almost resembles it in price. In fact, a little bit earlier in price, when we go back to that chart, you'll see that right now, if we look at the way things have unfolded, and look, there's no surprise, $22 to $17, huge level for this stock. It's been forever. I mean, since 1998, these green dots show when it's touched. It's really found strong buying and had a good run. We've come in there in September 2023, and what I like about the nature of the move is now we're starting to slow down on the way down and starting to have a bit more buyer activity, albeit we are breaking lower in terms of those lower lows, but they're getting smaller. And so is today the right opportunity to look at this one to get in? No. But if you go back to that chart, what's really exciting is that opportunity might be on the doorstep. And so with a little bit of that good news coming through, I've got this momentum line that I drew back in August 2007. Look how that kept you out of this stock until that right opportune moment. Now we've come back again to that level, and if I apply a similar momentum line, that opportunity comes above that $25. And so right now it's a watch game for Perpetual. Very exciting given how it has moved from these levels in the past. And the most recent or significant pullback was around 77% during the GFC. We've almost done the same numbers now at 74%. So all things are lining up to a serious bottom coming in. Be mindful of resistance at $28 if you are looking to play that level around 25. But if it can get through 28, the next serious level of resistance is 41. So this is one to watch, I think.
Oh, look, I've no doubt that one is to watch because it does look really, really good. But you do bring up a really good point: is we shouldn't always be looking at a stock to buy today. Because if you keep looking at a stock to buy today, you're going to miss some brilliant trades coming up because you're not prepared for them. And that's one of the biggest things we teach our traders is to do your research, put your work together, and then wait for the trade to happen. That way you're not trading on emotions, which a lot of people are doing. We're seeing people buy into stocks that they shouldn't be. And as we just discussed a few minutes ago, they're selling out too early. And as Zoran rightly said, the biggest sin that a lot of traders do is they sell out early. They don't let profits run. And the reason why they don't let their profits run is because they don't know how to exit. They don't know exit strategies, which costs them so much money. They leave so much money on the table and make their job a lot harder. So if you're one of those people, ask yourself how much money are you leaving on the table by not having enough knowledge. But any last words from you, Janine, before we move on?
I think that's an amazing level that you found there. Sometimes, is that around 75% retracement of that whole rise? Because I'm looking at that and thinking, if this is one of those big turning points, because it's already hit some really important levels, and we know that some of these levels in the course, it's when you get to that module on price that really blows you away, because you sort of look at price with a whole different perspective, don't you?
I was only talking about this with a student like a week ago, and it's like, she loves it. She goes, I know when I get into a stock, I know
roughly how far it's going to go.
How far it's going to go. I know when I need to watch it.
Yep.
I know the rules that I'm going to have to get into it. I know the rules that I've got to exit it, and I know when all those trigger. Now, she trades, sometimes she'll trade really short term in a matter of intraday and a couple of days, but she's always got her medium portfolio as well, and so she plays on some of those smaller stocks, but then she likes the bigger stocks because they make kick-ass money on those ones as well. So she's getting that little bit of a cash flow coming in to do that. But to me, it's just having the right strategies. What about you, Phil?
Yep, all the money's made when you know how to sell, so.
All right, well, if you do want more from us, check out our video, 10 ASX stocks to beat Bitcoin this year.